Hello, my people. It's my hope that you are all well, and welcome aboard to Finance Focus with Andrew. Of course, a platform where we engage in conversation that endeavor to enhance our financial literacy. And welcome aboard for a very exciting conversation tonight. So, welcome aboard, and our conversation tonight rotates around the Capital Market Authority. And if you are getting to hear the Capital Market Authority for the first time, CMA, or the Capital Market Authority, is the organization that regulates some of the investments that we have in our financial system. And one of them that is majorly known by, that is right now known by almost everyone, is the money market fund. But remember, money market fund is just a product under the big umbrella of what we call unit trust. And a number of unit trusts in Kenya. And Capital Market Authority is the organization or the government organization that is in charge of regulating all that. And regulating means checking on what they do, and of course setting some rules about their dealings. You know, there is no game that can be played without rules. So it is the Capital Market Authority that regulates what the fund manager or the investment company behave in the market. Because if everyone was to play by their own rules, I don't know what kind of a market we might end up having. So that's where Capital Market Authority comes in to regulate these fund managers, give them guidelines on how to operate, and direct them what to do. Now, of course, they are supposed to tell us how the fund managers are doing on a regular basis. And earlier this week, they released a report of how the fund managers fared in the first quarter of the year 2025. And that is the report that I want us to check. I want us to get a few insights from the report. We might get to learn a thing or two from the report. So I want us to check that, get to see what the regulator had to say about the fund managers, and maybe we might be able to get to learn a thing or two about the unit trust. So this is a very important conversation, especially for those people who are already in the unit trust. Maybe you have invested in a fund manager that is not regulated by the Capital Market Authority. So this is the conversation that will enable you to understand whether your fund manager is regulated or your money is at risk. So welcome aboard, and join in this conversation. In case you have any question or any feedback that you might want to give, the conversation is open, the chat is open, so you can get to share your views on the conversation, your views on the chat area. You can ask question and any kind of feedback that you might have regarding the conversation that we are having tonight. Feel free to ask any question or give any kind of contributions. Now, let's go direct into the report. Let's go direct into the report and get to see what Capital Market Authority had to say about the fund managers. Unfortunately, I'm not able to display the report on my screen, but I'm sure I will ensure to do that to give a better presentation the next time. So the Capital Market Authority opens the report by informing us that as at 31st March 2025, there are 55 approved collective investment schemes comprising of 234 funds. So a fund manager can have several funds. So the 55 approved fund managers had a total number of 234 funds. And out of these, it is only 39 fund managers that are active. So it means that we have around 15, or how many? 16 fund managers that are not active. And as I had mentioned earlier, one of the most common unit trust that is known by a majority of the Kenyans is the money market fund. And CMA is very clear on that, because on their report they have said the most popular fund is the money market fund. But we have said that money market fund is just a product on the big umbrella of what we call unit trust. So we have other kind of unit trusts such as fixed income funds, equity funds, balance funds, and special funds. Now, let's get to check on the performance of the fund managers. And CMA says that in the period ending 31st March 31st, 2025, the total asset under management, that is the total amount that Kenyans had invested by 31st March 2025, was around 496.2 billion, being a 28% increase from 388 billion reported in the period ending 31st 2024, that is December. So you can note that there is an increase in the investment amount, that is the total amount of investment held by all the fund managers collectively. There is an increase in the amount that was invested. So I think that's a good indicator that maybe the financial literacy in our country is improving. More and more people are getting to understand about the unit trust, especially the money market fund, because it has been all over the internet. That is from sometimes last year to up to now. I can say up to now. So I believe the part of the increase can be attributed to the increase of information. I appreciate that we are in the era of information, and more people are getting information regarding investment, regarding all these things. So I believe that part of that increase can be attributed to an increase in the information that is circulating in the Kenyan market. And let's now go. The first part of the report gives the market share. What percentage of the market is held by a particular fund manager? So, of course, we cannot read all of them because they are quite a number. So we cannot be able to read all of them. But maybe I think we can do the first 10. So we can get to see the first 10 giants in the market. And for me, a fund manager being the biggest shareholder in the market, it means that a majority of Kenyans have given them their fund to manage. For me, it is just an indicator of trust, because if you realize that you are the only person who have invested in a particular company, you cannot be safe. You will keep asking yourself, am I the only person trusting in this company? So am I the only one trusting in this fund manager? So for me, the only thing that the fund manager who has the highest capital share, I think it only, for me, it only indicates trust, because it means that a lot of people, a lot of Kenyans have trusted this fund manager with their funds. So it is not just a position. For me, the market share that you hold, for me, it is the equivalent of the trust that you have from Kenyans. And number one, it is good to mention that CIC has been holding the biggest share of the unit trust for quite some time, but for the first quarter of 2025, CIC was overtaken by Sanlam. So Sanlam took position 1 in terms of market share with a total amount of 90.2 billion. That is the asset under management. So Sanlam is currently managing 90.2 billion Kenyan money, and that is about 18% of the market share. The good thing is that even though we are talking about Sanlam being the biggest shareholder in the unit trust market, they are not dominating the market. They are not a monopoly in the market, because they are the biggest shareholders, but they only take 18.2%. So this still leaves the market quite free, having the highest person taking an 18.2%. There is no dominance in the market, and Kenyans are free to choose where to invest and how to invest. And number 2 is CIC. That is 87.5B, 17.6% market share, followed by Standard Investment Trust Fund with 11.5%. NCBA Unit Trust comes fourth with 49.9B, that is 10.1% of the market. Then Britam comes in at position 5 with 34.36, that is a 6.9% of the market. ICA comes 6th with a 22.263% of the market. ABSA comes with 21.5B with a 21.5B, that is 4.3% of the market. Then we have Cooperative with 17.78 with that is a 3.6%. We have Old Mutual 17.45B, that is a 3.5%. KCB comes at position 10 with a 13.32, that is a 2.7%. So those are the first 10 or the top 10 players in the unit trust market, and that is the amount that they are currently managing. That is as at 31st March 2025, and the percentage of the market that they are controlling. But unfortunately, I'm not able to display the whole report because the most important part of this conversation, if we are already a money market fund, a special fund, any type of unit trust investor, you need to ensure that your fund manager is on this list. If your fund manager is not on this list, you should know that they are not regulated by the Capital Market Authority. So for the other members of the market, I will not give the amount that they are holding, but I will just mention the name so that you ensure that your fund manager is part of those fund managers who are regulated by the Capital Market Authority. I had read up to number 10 where we were at KCB Unit Trust. So I'll just mention the other names. We have Jubilee, we have Etika, we have Madison, we have Nabo Africa, we have Zidi, we have Dry Associates, we have Stanbic, we have Lofty Coban, we have Zimere, we have Gen Africa, we have Faida, we have Apollo, we have Mali, we have Saiton, we have Kuza, African Alliance, Avocap, Enwealth, Genghis, Orient, Gulf Cup, CPF, Mayfair, Fauru, and then we have Equity, we have Taifa, we have Amana, we have Zeno, and we have Wanafunzi Fixed Income Fund. Now, those are the fund managers that are registered by Capital Market Authority and they are active. Remember, they reported that 39 of the 55 are the ones that are active, and those are the 39 that are active. And I don't know who have it. Okay, sorry if this opposes someone, but I don't know who have invested in this fund manager. Hii inaitwa Wanafunzi Fixed Income Fund, who are only managing a fund of 923,725. So their total asset under management is 923,725. You see, from my understanding, it is the purpose of these fund managers is accumulating funds. The moment you are able to accumulate funds in terms of billions, in terms of millions, in terms of billions, you are able to take advantage of so many things in the market. If it is for an example of let me use an example of fixed deposits that are offered by our commercial banks. Part of the money that you get to invest in the money market fund is invested in fixed deposits. Now, it is not that you cannot invest in a fixed deposit by your own, but if you approach your bank with 50,000 and you tell them that you want to fix that money for 1 year, they will just give you any rate, and you don't have power to negotiate. But the moment we accumulate my 50,000, your 100,000, another person comes with 1 million, and we approach the bank with 100 million, and we want to put a fixed deposit on that money. We have 100 million, so that means that we have some negotiating power. We can be able to negotiate for the rates of the interest, so we can able to search for better interest rate. Now, at that point, we will be the price, because 100 million to a bank is worth something, but the rate that your banks give you with your 50,000, it's either you take it or leave it. But if you have 100 million as a fund manager, we will be able to negotiate with the bank. And so I don't understand how this fund manager known as Wanafunzi Fixed Income Fund, I don't even know where they are investing with 923,000. 923,000. They don't have that negotiating power. They don't have the power that should be created by pooling funds together. So I could refer that to as a big joke. And if you are one of the people who have invested in Wanafunzi Fixed Income Fund, your money is part of that 923,000. For sure, you need to reconsider your decision. I am not saying you join any other fund manager so that you don't say that I'm marketing for any of the other fund managers. It's just a mention. Put your money where other people's monies are. So now on the next page of the report, the Capital Market Authority shares the big five. They are able to recognize them We had mentioned them, so we will not go back to that. And the only special thing that they have indicated on this page is the growth rate, the rate at which they have been able to grow. That is from, I believe that should be from 31st December 2024, because that is the year that we are comparing with. And we can see that Sunram has grown the most, from 44 by, that is, they have grown by 44%. So I don't know what they are doing in Sunram. They need to share with the other fund managers, because there is something they are doing that is special, that is not being done by others. So they should advise the other fund managers of on what to do. So I'm just looking at the key highlights that we can take home. So I just want to take the key highlights. So we had mentioned that the average asset under management grew by 28%. There was a 28% increase. So there is a table of the results. The results are available on the internet, so that you can check on the report. As far as the average increased by 28%, you get to realize that there are some of the fund managers that regressed in terms of the asset under management. And when we talk about assets under management, we are talking about that. We are talking about the amount of money that has been invested by individuals or companies. That is all the monies that particular fund managers has managed to accumulate, and it is the money that are currently investing. So as far as the average increased by 28%, I can see quite a number of reds in the table, showing that the amount that they were holding at the end of 2024 is more than the amount that were holding at the end of quarter one. It means that investors has withdrawn their money from those funds, or we say that the rate at which investors are withdrawing their money from those funds is bigger than the rate at which new investors are coming into that market. And one of the fund managers where we note a decrease is the one known as Apollo Unit Trust Scheme. They regressed by 4%. So 4% means that the amount that they were holding, in fact the figures are here. By the end of the year 2024, they were holding 2.3 billion. They were holding 2.4 billion. But by the end of quarter one 2025, they were holding 2.3 billion. So around 100 million was lost. And by lost, I mean was withdrawn by investors. Then we have another money market fund that indicated a regression. That is Mali Money Market Fund. Now, I think if you have been interested in following things to do with the money market funds, you must have heard about Mali Money Market Fund. So, Mali Money Market Fund was, let's say, it was owned by Safaricom, though it was a joint venture between Safaricom and another fund manager known as Genghis. And things went south with between the two of them, and that is why even Safaricom introduced ZD to replace Mali. So for Mali, the regress, I think it can be attributed to the dispute between the two, and even Safaricom coming to create ZD to replace Mali, because for Mali things went south. Then Genghis Unit Trust Fund, that is the company that I have just mentioned, that Mali Money Market Fund was a joint venture between Safaricom and this particular company, and in their own money market, in their own unit trust, they regressed by 19%. That is, they lost 19%, because at the end of the year 2024 they were managing 776 million, but by the end of quarter one they had regressed to 626 million. So they regressed. They had issues with their liquidity, and they had a lot of issues. So I think investors started withdrawing their money. And then we have Equity Investment Bank. They regressed by 1% from 119 million to 117 million. For Equity, I know they don't take new investors, so that is the reason, because it means the investors that are there, some of them get to withdraw their money, and since they are not taking new investors, their funds, their unit trust are likely to regress. So those are the four unit trusts or the fund managers that indicated a regress between December 2024 and the end of quarter one, that is the 31st of March 2025. So we have said you have Apollo, Mali, Genghis, and Equity. In my own opinion, this is my own opinion, not any professional advice, but a regress is not a good indicator at all. It means that investors are moving away from that fund managers. From that fund manager, it means that investors are moving away from that person. So if investors are moving away from them, it means they might have seen something, or something is not right in there. So those are not the fund managers that you can rush to get into. As others are moving out, don't be the one rushing to get in there. So I'm not advising anyone against joining them, but this is information. I just give you information, and then whatever you decide to do with that information, definitely it's up to you. But a regress, of course, is not a good thing. Maybe there are some in-house issue that investors who are already in there have seen, and of course they are moving away from. So I want us to go to another part of the report, and get to see a few things, and I just try to check on the main points that might be important, that you get to know them. There are a lot of figures in here, so not all of them are important to us. So but in case you have any question regarding unit trust, regarding the money market fund, feel free to type it down there. Now, there is a very good report here that I believe it is important for me to mention. This is a report on where the funds were invested. Remember the concept between the unit trust. The concept behind the unit trust is that money is collected by the fund manager, and it creates a very big pool, and it is from that pool that the fund managers gets to invest that money. So it gives the asset classes where the money was invested, and I can see government securities took the biggest share in the investment class. Let me see the percentage. I don't know whether they have indicated the percentage. I just wish I was able to display the results. Yes, the percentage is here. So 39% of the money that was collected by all these fund managers was invested in government securities. Remember, the money collected by fund managers, majorly for the money market fund, are invested in short-term investment, and majority of them are invested in treasury bills. So it's a clear indicator that majority, the biggest portion of the money, that is 39%, was invested in the government securities. And you might get to wonder, why government securities? Government securities are basically the treasury bonds and the treasury bills, where you get to loan the government either for a short term or a long term basis, and then you get back your money, and of course with some principal, because it is not a donation that you are doing to the government. It's an investment that you are making. So that should also be a good indicator that as an individual, government securities is an investment that you can get to consider, because if the fund managers, and these are companies that are managed by professionals, are going for the government securities, you should also consider, once you have the financial muscles, it means that government securities is also something that you can get to consider. And the number 2 on the list is the fixed deposit. I had mentioned about fixed deposits, but as an individual, you might not be able to take a very big advantage on the fixed deposit because of the interest rates. I think banks offers the lowest interest rates in the market, and as an individual with your 50,000, you might not be able to negotiate for the interest rate. They can give you a 3%, 4%, and there is nothing you can do about it, because 50%, 50,000 does not give you the negotiating power that you need. That's why it's advised now you should now go at the unit trust way, so that you can join other investors that have monies that have no negotiating power. Once you come together, you get that negotiating power. The other places where the money was invested was in cash and demand deposits, then offshore listed investments, unlisted securities, then listed securities, alternative investment, and offshore unlisted investment. So those are the type of classes where your money as an investor was invested in quarter 1 of 2025. So those are also the same asset classes that you can target as an individual once you have the proper financial muscles. Of course, you see, once the fund managers collects the money, they get some financial muscles, and they can be able to even diversify their portfolios in different asset classes. For you might not have the power to diversify so much, but remember, try as much as you can not to put all your eggs in the same basket. So once you think of diversification, those are some of the asset classes that you can also consider to invest in. Now, the other important thing that I have found in this report that you can check on, it is on the different amounts that were invested by by you people in the different asset classes. Remember we said that unit trust are so many products, and we said that the most popular is the money market fund, and but we have others. Number one, the most popular, the number one trophy definitely has to go to the money market fund. The moment you mention the moment you mention unit trust, the first thing that will come into majority of Kenyans' minds is the money market fund. The money market fund has been made so popular to a point of some people getting to say that money market funds are overrated. But anytime I hear someone saying that money market fund is overrated, I believe that is an individual who joined a money market fund without doing proper research of what money market funds are, how they operate, and how you get to benefit, what is the expected return. I believe those are people who got into money market funds thinking that they are going there to print money, only for them to be hit by a Kenya shillings 100 interest for the first month. They got disappointed and came ranting that money market funds are underrated. But it's clear that the hype on money market fund does not end in the internet. It goes beyond the internet, and Kenyans are really going into money market fund. And out of the 419 billion that, I think it was 489, 496 billion that we said that was held in unit trust, 319 billion of that is 64.4%, was held in money market fund. It means the investors or the individuals who invested in unit trust, 64.4% of them chose money market fund, and simply because it is the most popular. If you don't know about money market funds or you have not heard about them, you need to check more on investment. I'm surprised that number 2 was taken by special fund, and I think right now is when people are getting to get the information about special funds, right? So special funds took number 2 and they had a total amount of 86.68 billion. That is a 17.5% of the total amount that was invested. A total amount that was invested. So special funds, if you are coming across special funds for the first time, just go to this page. That is Finance Focus with Andrew. I have explained the concept of special funds, and I have given 3 case studies so far. That is the Mansa X, the Ox Special Fund by the Finder Investment Bank, and the Kuza Special Fund. So with those 3 videos, I'm sure you will get a clear understanding of what we call special funds, and it seems that special funds might be the next big thing in town. Then number 3 was taken by fixed income special fund. I believe fixed income special fund is unit trust where you are given a fixed rate, does not change. I hope you are aware that the interest rate of your money market fund changes on a daily basis, but for the said fixed income funds, the rate does not change for the entire period. So that is why it is fixed income fixed income fund. And of course that was bound also to attract quite a number of people, because quite a number of people are not risk takers. They have a very low risk appetite, and so they want some kind of fixed returns. So if they are given an opportunity to fix and given another choice of something else that is not fixed, they'll definitely go for that is fixed at that. Okay, fixed income funds took 17.3% of the market. Then it's clear that two of the most unpopular or least known products under the unit trust umbrella. Number one is the equity fund. I think I did a video on equity funds less than 2 weeks ago. So if you don't understand what are equity funds, just check the video on this page. It is there on equity funds. And equity fund is simply where the money that you contribute to the fund manager, that money is invested in shares or stocks. And investment in stocks is not considered as a low risk. So I believe that is why it is not so popular, because majority of people are not willing to take risk, so they prefer low risk investments. And the other one is the balanced fund, and the balanced fund is a fund that blends both government securities and stocks. So it is not also so popular because it only took 0.3% of the market. And I believe that people have not been informed about these other types of unit trust enough. The overemphasis were put on the money market fund. At least the special fund is coming up quite well, especially the Mansa X and the Ox special fund. Then the fixed income fund, not so popular, but maybe with time they will also get popular and get maybe to get to match the money market fund that seems to be already so much ahead of time. Sorry. Let's move on. So money market fund has won the battle, and definitely one of the reasons why money market fund had to take the first position. Number one is because of the convenience. You are getting some interest rate. And you can access your money at any given time. That is not normal. You have some interest, but you can access that money anytime. Then another thing is the flexibility in terms of initial amounts. You see, some money market funds do not have minimum investment amount, and that of course gives them an advantage over all the other kinds of investment. For the case of special funds, you find that some fund managers have set the minimum amount that you can invest. They have also set some lock-in periods that you have to lock your money in there. So the flexibility that comes with the money market funds are magical. So that is why they happen to be the most popular. So let's now go into the money market funds report. And let's see how many fund managers offer money market fund. The ones listed on this list are 47. 47 of them offer money market. No, not 47, 49. 49. I will just highlight the first 10. That is those who took the biggest share of the market. CIC took 25.6%. So for all the amount invested in money market funds in Kenya, that is a quarter of the market is held by CIC. Sanlam 22.6%, ICEA 6.3%, APSA 6.0%, COP 5.1%, Old Mutual 4.6%, KCB 4.0%, Britam 3.4%, Etika 2.9%, Jubilee 2.4%. So those are the most popular money market funds in terms of the assets under management. So it is good that you make some effort to get this report, ensure that your money market fund is on this list, because if it is not in this list, you might just be in for a rude shock, because it is dangerous to deal with someone who is not regulated by any regulator in the market. May it be a bank, may it be a circle, may it be a fund manager. So ensure that you get to check on this list, and ensure that your fund manager is part of those who are regulated to carry out the business that they are carrying on your behalf. Let's also read the least popular, and the least popular money market fund inaitwa CPF Unit Trust. I have no idea about it. Zeno Unit Trust, no idea about it. Genghis Legacy, Amana Unit Trust, Britam USD Money Market Fund, Enwealth, Saiton, Taifa, Equity, Avocap, Kuza, USD. So those are the least popular money market fund. You can get the whole report and get to have an overview of the giants and the others. I will not go deep into other types of special funds, because we have seen that they are not even popular, so people do not know even about them. But let's start something on the upcoming big thing. That is the special funds. I want to see, because currently in the market, the most popular special funds are only 2, but I'm shocked that on this list we have 29 special funds. But if you ask someone who has an idea about special funds, and you tell them to give you an example of a special fund, I can bet that one of the examples that they will give is either the Oak Special Fund by Finder Investment Bank, or that is the Oak Special Fund, or the Mansa X by Standard Investment Bank. But I'm shocked that we have we have 29 funds under the special fund, but we only know about 2 of them. That's amazing. So, and of course, the most popular special funds, of course, it goes to none other than Mansa X Special Funds, Kenya shillings, taking 47.2 billion. That is 54.6% of the total special funds. So they have for every 100 people who has a special fund, 54 of them are in Mansa X. So it is the most popular by, and they are managing 54.6% of the assets, followed by NCBA, Case, Basket Note. I'm reading the names as exactly they are referred to. So the second most popular in terms of assets under management is NCBA, Case, Basket Note, with 10.6 billion. That is 12.3% of the market. Then it is followed by Mansa X Special Fund, dollar. So Standard Investment Bank seems to be enjoying the space of special funds. They have, even if there were awards for the top 3 special funds, 2 of them will go with Standard Investment Banking, because the Mansa X case is at number 1, and the Mansa X dollar is at number 3. That is amazing for Standard Investment Bank. Number 4, we have Britam Special Fund. I'll just now read out the names. We have NCBA dollar basket note. Then it is at number 6 where we get the Oak multi-asset special fund. They are managing 2.7 billion. That is 3.1%. They have tried being noting that this is their second or that this is the third year they are in the market, because it was introduced around in 2022. They're coming up well, and I think they are doing the advertising well, because majority of people know about them. Let me just read the others so that you can be aware if you are interested in special fund, where to look at. We have said that we have the Oak multi-asset special fund, that is case. We have Madison Wealth Fund. We have Mansa X Sharia special fund. Standard Investment Bank again. It sounds to be the king of special funds. We have CIC Wealth Fund. We have AA Kenya Managed Fund. We have Saiton High Yield Special Fund. I'm sure that Saiton High Yield Special Fund is still there, and we still have some ongoing court cases with Saiton and these things of high investment something. So we have Old Mutual Special Fund Fixed Income. We have Mansa X Sharia Special Fund, that is USD, that is SIB again. We have NCBA Global Fixed Income. We have Etika Wealth. We have Lofty Coban Special. We have Dry Associates Special High Yield Fund. The names are so complicated. I hope the returns are also as complicated. I mean as high as the name are complicated. We have Avocap Euro Fixed Income Fund. We have Avocap Multi-Asset Strategy Special Fund. We have Avocap Africa Equity Special Fund. We have Etika Sharia Fund USD. We have Avocap Global Equity Special Fund. Very complicated name. I hope the returns are complicated. Kuza Sharia Momentum Fund. We have Wealth Special Fixed Income Fund. And we have Saiton Africa Financial Services. So those are the products that are regulated by CMA and a special fund. So if you are in a special fund, ensure that your company is mentioned there. If it is not mentioned, you need to do something, because you don't know who you are dealing with. I don't think this is very important, but we have the number of investors in the market, and the number seemed to have raised sharply from December 2024 to March 31st March 2025. So in short, for the first quarter of 2025, 600,000 people got interested and registered in unit trust. I believe this is the power of the information that got to circulate and got to be known by people about major money market fund. It is that effort that attracted, it is that information that attracted 600 people to joining the market of unit trust. So there are so many tables here that are so complicated for us, but the only thing that I can highlight from the last tables that you will see on that report, one thing you should realize is that when it comes to regulation by the Capital Market Authority, the Capital Market Authority regulates a fund manager. Then under the fund manager, they are the assets, they are the products that are regulated again by the Capital Market Authority. So if you check that report, under every fund manager, there are products that have been regulated by the CMA for that particular fund manager. So not every fund manager is regularized to take or carry out everything. So you need to be very keen when joining a fund manager. Just check the product that they are offering to you. Is it regulated by the Capital Market Authority under their name? So if we have a company, let's say Z Fund Managers, and I want to open a money market fund with them, even if Z managers are regulated by Capital Market Authority, I have to go and do a deeper check and get to understand whether their money market fund, that is the fund manager, that is the Z fund manager money market fund, is it regulated by the Capital Market Authority? So there is the part of the entire fund manager being regulated by the CMA. Then there are the products that they have been regulated under that particular manager. I hope you get my point. So it does not mean that Z fund managers are now regulated to take all the type of products that are in the market. So anytime you want a product by a particular fund manager, go and check that they are regulated to take that particular product. They might be regulated to take other products, but that particular one that you want to have with them is not regulated. So it is good to note that point. And I think that brings us to the end of the session. I hope you have been able to get a thing or two on unit trusts. I hope you have been able to get a thing or two on unit trusts if you are already an investor or someone who is thinking of joining the unit trust. So if you want to join, make sure you do your due diligence before joining any of the products. If you're already in there, if you want to diversify to another product, ensure to do some due diligence. And I hope you have understood that if you have a money market fund, that is not the end. You can get other products under the unit trust that might actually give you better returns than the money market fund. So don't stop at the point of having a money market fund. Keep exploring and trying other new funds so that you can keep up with the pace of the market. So don't get to the point of money market fund and think that now you are home and dry. I have a money market fund. That is all for me. So you need to keep checking on the other things that are coming up in the market, other products that are held, that are offered in the market, and get to understand them. If you can take a better advantage for them, the better. Remember, a money market fund is will give you returns because it is a low risk investment and you still have access to your money. So once you have enough money to cover your emergency funds, that is 3 to 6 months of your living expenses, you can now start considering other types of investment instead of clinging on that money market fund. It is good to explore. The market is big enough, so keep exploring. Otherwise, that is all that I had for this evening, and I look forward to seeing you for other upcoming sessions where we just have conversation regarding money. So see you some other time. If you found this conversation important, you can share to someone you feel that might need information. We need to keep spreading this gospel as far as we can. Feel free to ask questions on the comment section. Give a like at least to show that you learned something, and we get to grow all together. So see you in some other session as we get to dive into another thing. So in the meantime, may God keep you safe. Thank you.